Next panel, this is another fantastic one focusing on funding for startups. On this panel, we have big spenders and big idea generators, people that have funded many startups, as well as those who have had successful exits. Fantastic moderator who herself is also a big spender in the cybersecurity area. Let's hear it for our next panel for funding for startups. Thank you. And they're still getting mic'd up. By raise of hands, how many people, this is their first year at the Cyber Investing Summit? Wow, fantastic. Who here has been here for 2 or 3 years before? Wonderful. So as you've seen, we've actually grown this event pretty significantly in just its short start beginnings. It's actually, few people know, it's actually a family-run business. I started this with my cousin Lindsay and our mothers Hillary and Adrian, and everyone wearing a blue tag is actually a family member of ours here today who's helped us put this fantastic event together. In 2014, I actually helped sponsor the world's first cybersecurity ETF. And what we learned was that there was a ton of interest for investing in cybersecurity, but there wasn't really this venue to bring all the people with the ideas, the products, solutions, and those with the capital and the desire to invest in this industry. So what we really hope to do is build this event up, have more companies from both the public and the private side, and have many more people come and get to learn about the critical opportunities there are for funding this very important industry. Without further ado, our next panel. Thank you.
We'll try and sit in order.
Right. Trying to get everyone to sit in order. Can folks hear me out there? Okay. Yes, now? No? Until now?
Whoa.
This
Can
one
hear you
works.
now.
All right, you can hear me now. All right, yes. Well, hi everyone, I'm Katie Gray. I'm a partner on the investment team at In-Q-Tel, and I'm really thrilled to have this great panel here today. And we are going to talk about funding for startups. So to kind of kick things off, first of all, I think just recognizing that 2017 was actually a banner year for venture investing in cybersecurity. So 424 new deals last year, $5.1 billion invested. That's quite a lot, and I think many of the folks on this panel and others who are out here in the audience are some of the investors who have placed some bets on those companies. So what I want to do is maybe just to kick things off with having everyone on the panel just introduce themselves, just say a couple of words about the firm that you represent, that you are here with. Maybe talk a little bit about what stage of companies that you invest in, particularly in cyber. And then maybe also tell us one investment that you did last year in the cybersecurity realm that you are excited about. And obviously that you have many children, you love all of them, but maybe just to highlight one investment just to give kind of a flavor of the types of things that you do. Okay. So we'll start off with you, Bob.
Okay, great. Thanks, Katie. So Bob Ackerman, the founder of AllegisCyber. We are a cybersecurity focused firm. We actually have been investing in cyber for, depending upon how you define cyber, 16 to 18 years. So back before it was cool. When we shifted the firm's focus to 100% cyber 5 years ago, it wasn't very cool. When we did the world's first dedicated cyber fund 3 years ago, it wasn't very cool. Somewhere in the last 3 years, we got to be kind of relevant. You met my partner, Dave DeWalt, a little earlier today. I always describe Dave as the apex predator in cybersecurity. You'll see where that comes from. Our firm is, we've actually got a platform. And so AllegisCyber itself is early stage to early growth. So we kind of pick up things at Series A up to, we'll engage at a Series C or a Series D, where Dave typically tends to be more involved. We also have a platform, though, called Data Tribe, which is located in Columbia, Maryland, where we actually start companies. Our team are all ex-operating executives. We've been at this for quite a while. And part of what we did at Data Tribe really was in response to some of the things Dave talked about earlier. A lot of Me Too in this space. The great thing about the venture community is it's slow to adopt new ideas, and then when it finds a new idea that's got merit, it tends to overcapitalize the hell out of it. We're seeing a lot of that in cyber today, and our approach was to look at the things that we see in the marketplace that we like, but also take some of our expertise and some of our access to disruptive innovation coming out of government labs and bring those two together to actually start companies. It allows us to go earlier into the process, allows us to build more value, and frankly allows us to build a more differentiated portfolio. I think the last question, Katie, was a company last year, probably Dragos would be a great example. Dragos is an industrial control security team. This is a company we actually started at Data Tribe. It's a team out of the National Security Agency that were the ex-offensive team from the NSA. Tremendously deep domain expertise, and we worked with them to get the company going at Data Tribe, and when they were ready for their Series A financing, we led the Series A financing. So,
Great, thanks.
Hi there, Ron Gula, president of Gula Tech Adventures. Prior to starting Gula Tech, I was the CEO and co-founder of Tenable Network Security. Ran that for about 15 years, and really got into angel investing. A lot of those investments rolled into Gula Tech Adventures. We focus primarily on cybersecurity, although we have one drone, anti-drone company called Department 13 that hacks into the drone to keep them from falling on people at stadiums and whatnot. And we range from pre-revenue, pre-customer, all the way to participating in some Series Bs and some Series Cs. Very excited about that. Last year, we invested in a couple companies, and one of them is CoolSpan, and I got to mention them because two of the three Yoran brothers I know are here, and maybe individually I think I can take any one of them, but together they're going to, Alad and Dov are going to catch up on me. So looking forward to the panel, hearing everybody's questions.
Katie, hi. Bruce Taragin, Blumberg Capital. It's great to be here. We are based out of Silicon Valley as an early stage sort of seed and Series A early stage venture fund. I spent about 20 years in the Bay Area. I've also lived and worked in Tel Aviv, where we have an office, and I'm presently based here in New York. And we're actively investing really across the whole IT spectrum. Cybersecurity has been an area of focus since the early 90s. My partner, David Blumberg, was the fourth operating executive at Checkpoint Software in the early 90s. So we've been investing in cybersecurity for many decades at this point. But we're broad information technology. We had a really nice IPO with a company last year called Nutanix in the hyper-converged cloud storage space. And we're investing across mobile, social, digital, et cetera. Currently investing into our fourth fund. It's about $210 million. Our typical entry point, pre-product, pre-revenue, will invest as little as maybe $500,000 up to maybe $5 million in terms of initial check size, and then have the ability to follow on over the life of the company. Last year, we led a seed investment in an Israeli technology company, and I think if you look at the distribution of cyber investing in 2017, about 70% of it was Silicon Valley, or basically the state of California. Number two behind Silicon Valley was Israel at about 7%, so order of magnitude smaller, but nonetheless, very relevant. And we continue to invest and source amazing opportunities in terms of early stage technology out of Israel. So this company, Medigate, is a healthcare, IoT, cyber-related company focused really specifically on the healthcare vertical, protecting all devices that are internet-enabled across the hospital healthcare system. And if you really talk to folks at, let's say, Checkpoint Palo Alto, they're really much more focused on the IT side of the shop and not doing as good a job in terms of some of those devices. And I think at times it also ties in nicely to like ransomware, which we think is a big problem that's going to continue to grow in the coming years. Another cyber company, BioCatch, that we were early investors in a few years back, just raised a large round over the last quarter, and they're focused on behavioral biometric authentication. So just two examples in the cyberspace. We probably have about a dozen across a few of our portfolios.
Hey everybody, this is on now. I can talk loud or quieter. Great to be here. My name is Dev Yoran. I'm a Senior Director at Cisco, leading our strategy and BD teams. I came to Cisco several years ago as a CEO and co-founder of ThreatGrid, and sort of grew that company, was acquired into the business group here. The focus of what we do as a team is looking at a number of different technology parts of the enterprise, part of the enterprise system. So we leverage network security teams, cloud security teams and endpoint security teams, and that's how we situate our portfolio of products. And what we do as a business group on the strategy and BD side is work with a number of different technologies to integrate into those existing infrastructures. So we've got about 150 plus partners, technology vendors, which we've actually integrated with, publishing APIs and other things, validating these integrations, and it's about 250 integrations across those 150 partners. So we're extremely active across the entire infrastructure and kind of playing nice, collecting and moving this information, making it accessible to any given enterprise that has multiple technologies. The things we do from an investment side, because we're so open and we're so forthcoming and wanting to partner and integrate with technologies, is we actually look at this as a place to kind of get smart in a certain subset or in a certain part of the industry. So we typically do, not necessarily angel, but things that are a little bit later on in the maturity of the company. We will never lead around per se, so we'll come in after alongside with a lead, but we've been fairly active in this, across the IT, but our focus here is within cyber. And so we've done things with, Veridin, Flashpoint, Threat Quotient. We work closely with a company, an incubator out of Israel called Team8, and we've invested in Elusive and several others. So we're fairly active on both sides, doing probably 1 or 2 deals a year on that side.
Great, thanks everyone. And I should also maybe give a little background on In-Q-Tel as well. In-Q-Tel is a strategic investor. We invest on behalf of several agencies in the US intelligence community. So we're actually founded in '99, so I've been at this for a while as well, specifically by CIA to do investments on their behalf. We now represent about 10 different agencies, including Department of Homeland Security, Defense Intelligence Agency, the National Security Agency, and a couple of others. Well, we invest in a number of things. Cybersecurity is one of, as you can imagine, one of sort of the key areas that we do investments in. In fact, a couple of the folks up here on the panel, as well as other speakers, are former CEOs of companies that In-Q-Tel has invested in. We're quite active in the cybersecurity space, and if you're not a CEO who we've invested in, we're certainly co-investors in companies as well. And from a stage perspective, In-Q-Tel is stage agnostic, so we'll invest kind of at any stage of a company. Usually we're looking for companies that, the idea behind In-Q-Tel is really to find innovation in the commercial sector that has applicability within the intelligence community that could be applied toward use cases in the intelligence community, and then to help bring those companies along to get them to a point, the product and the company to a point where they can sell into that market. So we tend to be kind of at the Series A, Series B timeframe, but we are also investing in companies that are at more of a seed stage, and we'll invest in companies, at the Series C, Series D stage as well. And in terms of I was looking kind of through our list, we did maybe 6 or 7 cybersecurity deals last year. We don't always publicly announce the deals that we do, so the ones that are publicly announced are on our website, and I saw that only one of the ones we did last year is publicly announced, which is a co-investment with Allegis, which is Cyber Security, which does homomorphic encryption. Really exciting company with a woman founder, which I always love to see. And also someone who came out of the NSA, so very deep cybersecurity credentials there. So thanks everyone, great introduction. So one thing I would be interested to see is maybe just a sort of show of hands in the audience as to how many people here represent a cybersecurity startup. Great, okay, so there's some folks out there. So feel free to come talk to any of us afterward. We're very interested to hear about what you're doing. How many people represent like a venture investor? So good number as well. So we're kind of preaching to the choir here with you guys. How many people are later stage investors, maybe looking kind of more toward companies on the going public side of things? All right, so just a couple. And how many people here are more from the industry side, so companies, CISOs, et cetera, looking from that aspect. Okay, great. All right, that gives me a good context for some of the questions. So we heard from Dave earlier about some of the areas that he thinks are of interest, looking at kind of the gaps between the offense and the defense and in terms of where there are opportunities. So what I'd like to do would be just to kind of go down the panel, and maybe you can tell us a couple of areas, sort of like, hot or not, right? So tell us a couple of areas in the investing realm in terms of where you see 2018, 2019, maybe in the next couple of years. What do you think is hot? And, in terms of things that you guys are looking toward as interesting investment areas over the next couple of years. And what do you think is not? So what's wired, what's tired, what's hot, what's not? So we'll start with Dev this time and kind of bring it back this way.
Things that are hot, I'd probably be a little quiet on, but things that are not, I could talk about. Endpoints.
Hey, we're not paying you to keep your opinions to yourself here.
Endpoints is something
I got
that's
an email.
been overly invested in. The orchestration automation thing has been quite overly invested in. The deception and decoy market has seen a lot of investment over the recent years. There's a lot of things out there that have seen a lot of investment dollars that have been conflated there, those markets potentially.
So I'll go maybe the other side of what Dove's saying, since it looks like there's a lot of entrepreneurs in the audience, and please, as Katie mentioned, love to talk after the session. I think for us, in terms of cybersecurity, almost our whole fund is really some component of kind of AI, machine learning, deep learning application. And I heard some snippets from the earlier panels that are really allowing automation, scalability, greater speed and optimization across different verticals, whether it's in the digital space, whether it's in the enterprise, mobile, social, and then specifically around cyber. So I think broadly speaking, we love to see that kind of infusion of AI, machine learning, deep learning that's going to create a lot of intelligence. It really screams out of, it's such a, AI and machine learning are so perfect for anomaly detection. So any of these different characteristics where you're just, as a CISO, you're just drowning in a manual process that can be automated with, machine learning, deep learning for us makes a lot of sense, and we get excited about looking at that. That's number one.
That's hot now. That's new. Is what you're saying?
Well, I think it's ongoing. No, it's good. I like tension's good. Tension's good. So we've been investing in it for the last few years, but if you actually look at it, like deep learning's only been around since like 2010. So I think that, and if you look at the dollars, again, I'll probably misquote, but it was about $1 billion growing to maybe 7 or 8 billion last year in the deep learning, machine learning space around some of these cybersecurity applications. So I think there's still a lot more upside and opportunity, number one. Number two, maybe this will make you happier. I think there's a lot of anticipation around specifically IoT cybersecurity, and something like by 2020, 25% of all enterprise breaches are going to be IoT related. So we think that is an area that's still in the relatively nascent stages, and there's opportunity for investment. I think third, really verticalized applications, as I touched on sort of before around Medigate. I think that many of these applications need to be customized for verticals. They can't just be broadly applied necessarily across financial services, insurance, healthcare, et cetera. So I think we're going to see more of that as well. So those are some things that we're excited about within cyber. And again, cyber, relatively speaking, in terms of IT expenditure, is a relatively niche market. We are still very broadly focused as investing in early stage technology.
Yeah, hot and not is definitely a fun question. So everybody has legacy stuff. So anybody who can make cyber hygiene easy for legacy things, so patching, authentication, making these big crunchy or soft on the inside, crunchy on the outside networks a lot harder to hack, definitely good. So we're seeing a lot of interest in new types of patch management. New types of security on the inside, things like zero trust, moving target defense, that kind of stuff. I'm also seeing a lot of interest outside of the U.S. in trying to keep the NSA out of stuff, right? So people want encrypted communications, right? They can't just trust the major chat vendor of the day. So they want to have their own sort of comm center, own control of those kind of things. That's all hot. What's not, again, endpoints, I think AI, I've been pitched probably maybe 20, 25, endpoint AI, next generation, sprinkle whatever you want in there, OS query, blockchain, that kind of stuff. I'm not going to see, I just don't see it happening. And then a hot area, I think, everybody says the cloud. What does that mean? Is it collecting telemetry from your SaaS applications? I have yet to see sort of the hunt teams hunt on Salesforce telemetry logs or hunt on, Dropbox logs, right? It's coming, but it's not really there yet. And there's companies in that space. I'm not going to say it's hot. It's hot for me. And because I think that's where, some of these adversaries that Dave was talking about might be operating undetected. And this should turn into decent investments.
So my dear partner Dave kind of gave away our playbook in terms of what we think is hot. I'm not going to say a lot more about that, but I will say one of the things that we do, and I sort of alluded to this earlier, the great thing about the venture community is it will overcapitalize any quality opportunity. And as a result, we've got 3,000 companies, and Dave talked about some of the metrics in terms of how many of those companies will actually turn out to be reasonable exits. Jay talked about sort of the $300 million threshold, 150 to 300 being sort of a nominal, a valid point. The things that we tend to look for are things that are truly disruptive. And where we draw some of those insights from is our understanding of offensive tactics. And maybe it's a reflection of the background of our team and where we come from, but we actually think that offensive techniques and tactics inform where defensive solutions should be built. And so if you look at what we do at Data Tribe, for example, we draw principally from the NSA, principally from offensive teams, because eventually those techniques will be distributed and proliferate through the hacker community. It will end up becoming more broadly disseminated, and that will be the next wave, if you will, of threat vectors. So we tend to live there. We also tend to think about data science a lot. A lot of what we're doing today is sort of analogous to a dike with 1,000 leaks in it, and everybody's running around with 1,000 fingers trying to plug the holes. That's necessary, but that's not how you get ahead of this at the end of the day. The way you get ahead of this at the end of the day is thinking about how do you stop water from coming through the dike? And those are data science problems. Again, you mentioned in Veil, homomorphic encryption, a great example. Things around data provenance will turn out to be really, really significant sort of methodologies to how to better manage data to build inherently more secure systems. In terms of what's not very interesting today, world doesn't need another threat intelligence company. I don't care if you're 10 or 12% better than everybody else out there. We have too many undifferentiated Me Too companies that have attracted a lot of this capital. And the challenge, of course, is it just raises the stakes and the cost of being successful for everybody that's doing things that are truly disruptive. So for us, the fundamental question we ask every time we're looking at anything is, does this fundamentally change the game? Not in an incremental way, but does it fundamentally change the game? And as you look at that, you've got to be willing to think outside the box a little bit. If I go back 5 years ago, talking with the team that started Carbon Black, great pedigree with that team, and looking at endpoint, and when they talked to the venture community, what they kept getting back is nobody wants another endpoint. Nobody wants another endpoint, until the market took an endpoint public last week, 5 years later. So, cyber is one of those domains where I think unconventional wisdom is the better way to go. Conventional wisdom tends to be overcapitalized, tends to be undifferentiated, and it tends to be pretty pedestrian in its potential applicability and the ability to create value long term. It's the unconventional wisdom that really comes from deep proprietary insights into how these threat vectors actually develop and evolve is where you really begin to identify things that are going to be meaningful.
Yeah, that's great. Yeah, and just to kind of pull on that, 400 cybersecurity companies got funded last year. Not sure how many were out there looking for funding, but in security in particular, it's very, very hard to sort of rise above the noise, and it's very hard as a startup to show value quickly, to convince CISOs who have dozens of security products already in the organization to then to add another one. So one thing I want to ask again, and I'm just going to throw this one out to the whole panel as well, which is from the perspective, some of you, it seems like most of the folks up here are kind of more earlier stage investors, so sort of seed through, Series A, Series B. And when you answer this question, please kind of maybe give an indication as to which stage you're talking about, because it really does make a big difference in terms of the answer to this question. But what are the things that you are looking for when a team comes to pitch you? And most of us have heard 4 or 5 at least companies sort of pitch the same similar type of idea, the same space generally. What are the types of things that make a company kind of rise above, at the seed stage, at the Series A, at the Series B, that make you excited about doing an investment? And some of the things I'm thinking of that maybe might come up is, as a horizontal kind of play, looking kind of doing something that fits across all different kinds of industries, something that's interesting? Or are you more interested when there's a real targeted kind of vertical go-to-market opportunity there? How much does location matter? How much does the background of the team matter? So I guess we'll start off with you again, Bob, just to mix things up.
So I think the question framed in terms of stage, is absolutely right. When we look at, again, Data Tribe is where we start companies. There it's about pedigree of the team. We draw principally out of government research labs. These are subject matter experts that have been operating on the offensive side for a number of years. So there we're going after subject matter expertise, domain expertise. We understand that the idea of building a business is a new idea. And we understand that we're going to have to augment their domain expertise with company building experience. If I jump out to the things that we fund in Silicon Valley, there's a well-established Silicon Valley playbook about how to build a company. What is not as well established is deep domain expertise. Not to take too much away from the Valley, but those government labs, I always joke that government innovation is an oxymoron unless you're talking about cybersecurity and data science. And then the labs are materially ahead of industry by 5 to 7 years, I would say. Which is why we tend to look for disruptive innovation coming out of those labs. When you get out to the Valley, there's a playbook around building companies. So we shift our bias a little bit in terms of the questions we're looking for. And there's going to be a little bit more focused on pedigree of the team, because pedigree in cybersecurity for us is absolutely everything. You can't learn fast enough to be competitive in this space. And that's one of the things, like a lot of entrepreneurs attracted to the market learn the hard way, and frankly, they learn it with capital from venture investors who learn those lessons the hard way as well. So we tend to look for domain expertise, and what we'll look for in those companies is how fast can you get traction in the marketplace. If you have the domain expertise, is this going to be an educational sale that's going to take a year, or what's the time to value? And we're looking for short time to value in those more mature companies because, as Dave talked about earlier, you have your moment in time. There is a window of opportunity. How fast can you get traction and expand within that window of opportunity is essential to sort of your competitive posture in the marketplace. Location turns out to be pretty important for us today. One of the themes, particularly with early stage companies, is everybody's virtual today. I don't buy it. I'm an ex-CEO, built 2 companies. Let me tell you right now, I think it's bullshit. Total bullshit. You cannot schedule the aha moment on a conference call once a week or twice a week or every day. Proximity matters. You need to be around the table, kicking around ideas. When that aha moment comes together, that really is the spark of genius that allows a startup to establish traction in the marketplace and begin to build. So we do look at location in a pretty significant way in terms of where is the team. Data Tribe, our teams, everybody has dispersed after the NSA, and it's like, you're all coming home. You're going to build a company with us. You're all moving back to Columbia, Maryland, and that's where we're going to do it. You're not going to phone it in. Same philosophy when we're out on the West Coast. I think one of the real big challenges we look at is how big can the opportunity be? Again, you go back to the math that's been talked about twice this morning, $150 to $300 million exits for the vast majority of cybersecurity companies. If you're going to be at the high end of that range or higher, you better be doing something broadly horizontal. It doesn't mean niche things aren't important. They're very, very important, but they don't drive venture economics. And as a venture investor, we're looking for things that have broad horizontal applicability where we have a higher probability of being at the high end of that exit range to generate the returns that we need. It's just some of the things we think about.
That's great. And, size of opportunity, pedigree of the team, need to be all in the same location. Anything there, Ron, that you want to agree or disagree with, or?
I think Bob speaks the truth, right? I mean, for me personally, if I have a strong signal on the technology, if I just think this technology is something I've fallen in love with, I think it's going to go, but the team can't take it to market, they're not going to grow with it, it's a bad deal. I'm not going to do it. Same thing. If I love the team and I can work with the team and help mentor the team, but their technology vision stinks, or it's not a product people really want, it's kind of, hey, nice guys, ladies, whatever, we're going to do it. I like to see both. Is it timing? Is it the right team? And can we work together? And then for me personally, it's all about expectations. We're not writing, the kind of checks that these $300 million, $500 million funds are. So can we bring, with this team, another one of those investors to the table? And that's something we've been trying to specialize in. And a lot of times, based on the country or the people or the background, you might take certain investments completely off the table because they're conflicted out or things like that. So that factors into our calculation quite a bit.
Yeah.
So just maybe two things I would add to what Bob and Ron are saying. One, in terms of geography, as a firm, we're geographically agnostic. So, our team, the bulk of our team sits in Silicon Valley. We have an office in Tel Aviv. I'm here in New York. We spend a lot of time on an airplane. And, the joke in Silicon Valley is they don't want to invest in a company unless it's a bike ride away from, their offices. So we have that flexibility and that proactive approach. And to, for example, invest in cybersecurity and to completely ignore the Israel market early stage, to us just doesn't make sense. So very frequently we're looking at a cyber company in Israel from the East Coast or Europe, and then Silicon Valley as well, and trying to invest in the best and the brightest. Second point I would say is, one of the things that we've done, because we're such early stage investors, is we've built out, really over the past 20 years, a network of CISOs and CIOs, really C-level executives across about 125 organizations globally. And we sit down and talk to our council on a formal basis. New York, San Francisco, we have lunches every quarter, a dinner once a year on each coast. And then informally, anytime we're looking at an opportunity. So part of our investment and due diligence process is really putting these prospective companies in front of that CIO, CISO network. So it's especially if you're a young Israeli startup with an idea and you're trying to access the market here in Silicon Valley or in the US market, and we can put you in front of dozens of heads of IT across the enterprise. That's proven to be quite differentiated and valuable. And to the earlier comment, it really helps accelerate the sales cycle and the process of getting these companies out in front of that. So to the extent there are CISOs here or CIOs here, happy to talk to you after the session. We continue to grow out that council and network, and it's really proven invaluable, and it's an amazing asset for us as a firm.
So I'll answer this both from like a personal perspective and also from a Cisco perspective. Cisco is similar to, I don't know, the DMV or the UN or Congress or some other dysfunctional body where there's so much, there's a lot of different opinions across the team that all have input into the process, and it is a long and extensive process. And my personal views don't always necessarily coincide with that, with some of the sort of the greater ideas. So something horizontal-wise versus and sort of infrastructure-wise changing the world is something that probably Cisco thinks a lot more of. Personally, I think things that are incrementally valuable is something that's more achievable and has a more propensity to become successful. Some of the things that Bob mentioned, location and geography. Personally, for me, I don't agree with the geographical proximity of everyone having to be together. Yeah, the core guys on the initial idea at the very earliest stage of seed. But as we grew, we were almost a completely virtual company. We got together every 6 months, and we did okay in that regard. But for someone like Cisco, it is important to have folks and have center of masses where people are located so they can communicate and do the things and have those in-person types of meetings. quite a bit. So, there's a varying degree of things that are interesting, and Cisco sort of doesn't look at that lens as like a unified, this is the only answer that'll happen. We do go in niche, we do look at infrastructure things that are more broadly speaking.
And I think that's a good point. It's sort of, in some ways, whether or not you as a team think it's achievable to, have a distributed team and not all be in the same location together. If you're out there raising money, one thing to consider is the fact that some investors think that's really important, and it may affect who ends up being able to invest in you and that sort of thing. So, but that's.
And one of the things I do also agree is the pedigree of the team. I think that is critically important, because you're going to build a widget or something bigger, and it's going to be great today or needs to get better. But there's always things that are going to throw a curveball at the company, and the team that sort of has a good understanding, has a good chemistry, is so critically important. Some of the things where I'll disagree are things that are too Govy focused, leadership that's maybe too academically inclined. I kind of personally, I think the hustle factor and people working in commercial markets and understanding sort of the speed of business is pretty darn important, where some of the academic and government areas maybe lack some of that fire to get things done in the short term. But
yeah, that's a good point.
So in terms of location, I can't remember who it was who mentioned that I think it was Bruce who mentioned that 70% of the investments in cybersecurity are in the Silicon Valley, in California.
Cyber.
And so In-Q-Tel is based in the DC area. I'm in our California office, so we do have an office in Silicon Valley. It sounds like a few others have kind of multiple locations as well. But here we are in New York. New York, has not so far been a real locus of cybersecurity companies, but there have been some good successes here. There's a close tie or a close, closer proximity to Israel, where there's a lot of companies being generated or being founded. So I'd be interested to hear maybe Bruce and Bob and whoever else wants to kind of jump in on kind of duke it out. Is it where is cyber talent coming from? Is it the DC area? Is it New York? Do you think that locus of is going to move from Silicon Valley to New York or DC, or with obviously Israel is continuing to be a place there? But curious your thoughts on that.
I think when you look at cyber and you look at data science, this is fundamentally about the people. And if you buy my premise that it takes expertise to succeed in this business because things move so quickly, you look at where the concentrations of talent are. And so, Israel for a lot of obvious reasons, Maryland for a lot of obvious reasons. There are clusters that have developed in Atlanta. There's a cluster that's developed in Texas. There's a little bit going on in Pittsburgh around CMU, principally around a professor. I really think in the case of one particular individual. And then you have Silicon Valley. And so, our rule is, look, unless you stood on the wall and have gone toe-to-toe with the bad guys and walked away with their head, you don't know. And so you start looking at where is that expertise. And that expertise is concentrated in very specific geographies. And that's where the business grows up around. And then you start digging a little deeper, in terms of, where's the cutting edge innovation. You have a lot of folks that have the pedigree that we look for in Silicon Valley, but they are a little more on sort of the incremental, incremental innovation side of the equation. We're interested in that, as long as it's massively disruptive. If you look for the really disruptive things, you get closer to some of the labs where people have been doing research over an extended number of years that you can take advantage of, as opposed to, if you look at homomorphic encryption, nobody in Silicon Valley is working on homomorphic encryption. This has been a science project for 20 years that's taken massive investments in world-class mathematicians to crack the code. That is not a venture financeable project from inception. When it gets to the point where the math is proven and it works, then it becomes investor investable. but that was coming out of a government research program or out of IBM or a little bit of what the guys at Microsoft are doing.
So, I'm sorry.
No, you can.
Yeah,
jump in.
brief comment. So even at Tenable, when we raised our first A round, which was $50 million, when we were talking to people, they said, well, you're like that government contractor. They had no idea that we were doing about, almost twice as much as that in revenue, and that most of it was commercial. And, so if there's ever an investment opportunities, that DC region, there's so many people who have no idea how to go to market, how to pitch a product or do anything like that. And these are basic investing things. But the talent that Bob's talking about, it's there. It's one of the big reasons I left Tenable to go do Gula Tech Adventures. A lot of our companies are in that area, and they've got that opportunity, and they need our help. And I think as an investor, if you're looking at companies out there, you should take a second look at that region.
I'm going to amplify that point, David, just real quick. 3.5 times as many cybersecurity engineers in the state of Maryland and the state of Virginia than the rest of the U.S. combined. If this business is about talent.
I think we're kind of missing the point, though. I would tweak Katie's question a little bit. I think I'm probably the only one on the panel who's actually lived in all 3 geographies for the past 25 years.
So when you can't win, you reframe the question right now.
You see, VCs are very competitive. It has to be win or lose. I think, we just, as long as we have a good time. So having, again, lived about 20 years in Silicon Valley, lived in Israel for a couple of years, living in New York for the last 3 years, I think the commonality of all of these companies is, regardless of whether they're coming from Montreal or New Mexico or Utah or Silicon Valley or Tel Aviv or Berlin, they're all passing through New York. They're all passing through Silicon Valley because it's the old joke of why do you go to the bank to rob because that's where the money's at. That's where everyone's going. So I think all of the entrepreneurs that we end up meeting, even I haven't had to go over to the Mid-Atlantic to Boston, DC. All the firms in Boston are opening up New York offices. They're coming here. To me, it seems like clear at this point, after about a decade of back and forth, New York is that hub for the East Coast. Silicon Valley is that hub for the West Coast. I mean, Tel Aviv, is amazing. I don't think it's going to change. It's only gotten better over the past 25 years. So I think those are the major hubs of innovation, and that's where the VCs reside. And as long as folks need the dollars and they need the customers, they're always going to go there. So again, we're agnostic. I don't really care if the technology is. If the team is coming out of, again, Berlin or Hamburg or, Toronto or Vancouver or Silicon Valley, they're always going to go through the markets that we sit in, and those are the opportunities that we see. Now, I personally think there's, a high amount of noise to sort of signal ratio in some of those regions. I just closed an investment in Silicon Valley that I led for our team out on the West Coast, even though I'm sitting here in New York, and the investment before that I led was out of Tel Aviv. I still think it's amazing being in New York because 80% of my portfolio passes through New York, every month or two, and so we're touching those companies, helping them get in front of Wall Street and maybe the ad tech kind of ecosystem or whatever it might be. So that's how I would sort of almost tweak your question a little bit. Of it's a little bit less important where they come from, but are they willing to hop on a plane, go to where the markets are, and can they build an amazing? We don't care if you're based in Chicago as a team of entrepreneurs, but can you grow that company to be a $500 million plus company and have the talent in Chicago or in Montreal or whatever the city is that, wherever you want to build your company? And if the answer is yes, then great. We don't really care. We're happy to get on a plane. Many of my colleagues, will move that company or not fund that company and require that company to move to Silicon Valley.
True.
I get it. It's just that's not how we roll as a firm. And that's, again, maybe one of our differentiations. And I think, the world is flat. And so there's a little bit of sort of hubris and arrogance, in the Bay Area of like, hey, everything, the sun rises and sets here in the Bay Area. The Bay Area is amazing. I miss it. I love it. I still have my home there, and I go there pretty much every month. But there's a lot of innovation going on in other places around the world, and we like to be receptive to that, as an early stage venture firm. And again, we may not, end up investing in that company from Santa Fe or coming out of Los Alamos Labs or wherever it might be, Livermore. But the point is, I think we want to see those opportunities to really make an intelligent evaluation and say, okay, we believe, to the earlier point, like this is the right team, this is the right technology, this is the right market, and ultimately invest in that company.
Yeah, this is great. Actually, I think we're going to have to wrap it up. Unfortunately, we could keep going on and on.
I was going to say 2 comments. One, Ron had an A round at 50 million. That's pretty impressive.
Yeah,
I don't know if anyone caught that. And B, you commented that you had
It was shekel.
Shekels. And B, you said that there was, you had your round. I'm not sure if this is a great story of go-to-market or a poor story of go-to-market, that you had such tremendous revenue, but you had to explain to your investors what you guys were doing. You had to explain the story. Or is it just talks to the incompetence of the VC community, perhaps?
I'm just going to agree with you.
Yeah, so definitely, plenty of disagreement among people all investing in the same space. Obviously, the sunsets are better in California. All roads lead to New York. The Earth is definitely not flat. Facts matter. But appreciate you guys, your time up here, and I think hopefully this was valuable. And anyone who wants to come and find us at the break, please feel free to do so.
Great. Thanks, Katie.
Thank you.